Getting this going. All right, everybody see that?
Yep.
Cool. All right. Short-term rental insurance. It is complicated, but like I said, we're going to come through and we're going to make it as least complicated as possible. So this is an insurance form, and it's a lot of jargon. It's a lot of stuff that's very confusing the first time you read it. A well-structured insurance policy is anywhere from 60 to 120 pages long. So it's probably the worst book you'll ever read. But I will say this, if you actually pull out the full insurance policy and read it, you'll fall asleep the first time you read it. Read it again a second time, it starts making sense. And by the time you read it a third time, you'll know more than virtually any insurance agent out there that's selling the contract. Okay. Nobody reads insurance policies anymore. They just get a 2-page quote. It says, here's your limits of insurance and here's the premium, and we click buy and we move on with life and hope we never have to use it. In this industry, we need to be a little bit more diligent than that. There's so many different types of risks and what ifs, and this can happen, that can happen. It's really important to understand what this language is and what it means, right? The other part of this is you can see two different languages here. You see building and personal property coverage form, and then you see commercial liability. I throw that up because we sell a commercial liability product. It's just a higher level of legal protection. But all insurance policies are made up of these two types of forms, a property coverage form and a liability form. And it specifically outlines how you're covered in the contract for your building and your personal property, such as all the furniture in that room would be personal property. And then how you're covered in the instance of a liability lawsuit of somebody trying to sue you. And the beauty of insurance contracts, and for me, it's a little bit different because, yes, I've been doing this for well over a decade, and I've read a lot of insurance policies, and I'm just kind of a nerd like that. I enjoy it. But they outline everything in black and white. So many people think that insurance language and insurance policies are so misconstrued and written in a way for companies to get out of claims or weasel out of things. But once you read it and you start to understand the language, or you have a very in-depth conversation with somebody who's knowledgeable on insurance form language, it really starts to make sense when you start seeing these. You know, how your interest is, how the company is going to respond to a claim, when that claim happens, how they pay the first payment, and then how you need to engage with them around supplementary payments to get more money from them. What is covered, or more importantly, what is not covered, and why it's not covered. And then if it's not listed as an exclusion, you can file a claim for it. So the more you can kind of focus and educate yourself around insurance policy language, the better off you're going to be in your risk management planning at the end of the day. So ultimately, Proper, we're here to help demystify. Our primary MO here is education first. The lights stay on because we sell insurance policies, yes, but our primary focus is education around insurance and risk management. So for me, for those of you who just came in or might be listening to the recording, my name is Nick Massey. I'm the Chief Sales Officer at Proper Insurance. Over a decade in specialty insurance products. I started my insurance career professionally in estate planning out here in Montana for farmers and ranchers, and then transitioned into Proper Insurance around 8 years ago. And there's a lot of similarities between what I was doing to what we're doing with the investment properties of short-term rentals and managing that risk, managing that income, and making sure we can continue to maintain that asset and the return on investment. I'm based out of Bozeman, Montana. Our entire office for sales, underwriting, and claims is based out of our Bozeman, Montana office. We do have an office in Frederick, Maryland, but we keep them behind closed doors because they do all the boring stuff, accounting and insurance compliance. So you might get an email from them every once in a while if you haven't paid your bill, but for the most part, you're dealing with our team out here in Montana if you work with Proper. A little more about what we do specifically is the company was founded in 2014 off the backs of our ownership group. Our CEO specifically more or less created the modern hospitality insurance policy that's out on the market today back in the early 1990s. Bed and breakfasts and boutique properties, motels, hotels, things like that just weren't really insured right with the standard market. So he came in and created a new way to do it. He ended up selling that that whole program to another company. And then in 2009, he started another program through another firm, which then evolved into the company we have today, Proper Insurance, with the policy that we're selling today, now 10 years later. We've issued well over 150,000 policies in all 50 states. Doesn't mean I have 150,000 clients on the books. It's just that's the sales numbers. People come and go. People buy and sell properties, get in and out of the business. We are the first of its kind and one of a kind custom penned insurance policy on commercial forms for short-term rentals. There's a lot of folks out there who are companies that are trying to duplicate what we're doing, but we are the experts and pros on it. We are the creators of this market. Right now, we insure a little more than 14 billion in assets, and basically what that means is that our insurance carriers that we partner with need to have the financial strength to pay all those claims. If all of our properties caught on fire tomorrow, they have to have $14 billion plus in the bank to pay those claims. That is why we only use the largest and strongest insurance market in the world, Lloyd's of London, and our other partner carrier called Concert Specialty. Both of these companies are A-rated by AM Best Excellent, which is really what you want to look for in a carrier partner. We also earned an endorsement from Verbo in 2018 that we hold today as the exclusive vendor for annual home insurance for short-term rental properties. That was back in 2018, and we still maintain that today. And it's something that we continue to be proud of. So some of the insurance basics for everybody. Property owners. Everybody in that room is a property owner. You own a property, you operate a short-term rental, you need to have your own insurance. If you use a property manager, they have their own insurance. That insurance is not for you. You need to make sure you have your own coverage. So really, in the basic sense here, the retail insurance markets do not adequately insure short-term rentals. In fact, what they typically do is they throw on a flimsy endorsement for $215 a year. They give you $2,500 in theft coverage. They will pay a water damage claim or a storm damage claim, but they're not enhancing the policy for the specific exposure of short-term rentals. They're not out there at the conferences. They're not advertising during the Super Bowl that they cover short-term rentals. It is just not their area of expertise. Many of the amenities that are offered by a property, they're there to help you maximize income. And so the problem with maximizing income is you maximize occupancy, and a lot of this stuff is excluded in the retail market for liability and property coverage as well. One thing to also keep in note is that price competition is a direct result of less coverage. The cheaper your insurance policy gets, it simply means the more coverage they're stripping away. If your auto insurance agent calls you up and says, hey, I saved you $40 a year, your next question should be, what coverage did I lose? Because they probably shopped it, you got a weaker type of coverage, now you don't have windshield coverage, now you don't have roadside assistance. That's the point of this price competition. Yeah.
Can I ask you to back it up to many amenities offered by the property to maximize occupancy are excluded? Are you like a hot tub? What are you referring to there that might be a risk?
Yeah, so let's use the big one. I take it everyone's familiar with air cover through Airbnb. Okay, they claim they give you this free liability and property protection. What do you really get for free? So you host a hot tub, that's an amenity. They may respond to a slip and fall claim of somebody getting out of the hot tub, but the biggest risk with a hot tub is not necessarily a slip and fall, it's actually communicable disease. And so with hot tubs, or any hot water for that matter, if somebody has a small lesion on their body, they can get what's called hot tub rash or Legionnaire's or hot tub folliculitis, kind of different terms for it. And communicable disease is excluded across virtually all liability insurance policies. It's something that we took into consideration when we developed the policy and said, we're not going to exclude that because a lot of these properties have hot tubs. Other amenities that can maximize occupancy could be a lakefront property with canoes and kayaks. A lot of these companies either limit or exclude coverage for watercraft, for non-motorized watercraft, to clarify, or they limit your coverage to premises only. So that means when a guest goes off your property line, you no longer have any coverage. And if they become injured and name you in a lawsuit, you're paying for that yourself. because it's excluded in the contract. So that's where it's really important to have a conversation around the amenities that you're offering. And I have some more slides on that too, so we can know what questions to ask our agents when we're talking to them. So again, proper insurance, we're specifically designed around these risks. I like to think we thought of everything for the most part, at least everything we could get away with the carrier on convincing them to cover it. But in the equation of risk management, back on price competition equals less coverage, the basic equation of insurance premiums is risk transfer. How much risk do you transfer onto the carrier is a direct relation of how much you're going to pay in insurance premium. Now, in some cases, it's not always correct because sometimes we find that we provide a more comprehensive coverage, and in a particular market, I might be less expensive. That's a rarity. But for the most part, when you pay more in premium, the basic equation is you're typically getting fewer exclusions. It's not that your policy limits are higher. It's fewer exclusions, meaning more protection. So here to transfer of risk, they're written for the specific type of risk, auto, home, business, etc. They clearly define what they're covering on that risk transfer. The premium is going to be rated based on risk. Certain areas in the West Coast are going to have a higher rate due to risk because of things like forest fire than a house in Omaha, Nebraska, for example. A risk in Texas may have a higher rate due to being in Tornado Alley or hail for roof replacement and stuff like that versus someone up in Maine, for example. So geographical location has a lot to play in where it's called an actuary. An insurance actuary is going to figure out the risk and the premium that needs to be charged in order to sufficiently insure that risk. Remember, if we go back, I said we got over $14 billion in homes insured. They're doing the math on that to say we got to charge X amount of premium to make sure, based on loss history data, that we can cover losses. And by no means does that mean proper insurance collects $14 billion a year in premium, right? But what we do is we collect premium in concentrated risk areas that is correct for the risk due to the elevated loss ratios. Areas with lower loss ratio, meaning those areas aren't subject to natural disaster. Maybe it's just a very quaint, quiet area where there's not a whole lot of guest damage or liability claims. They probably pay less in premium for that location due to that. Coverages are going to be added to either reduce risk to the insured, that's going to cost you more money, or coverages are excluded to reduce exposure to the carrier. That's where you pay less money because you have more exclusions. That's basic risk transfer. Insurance is always a contract, so both parties are going to always have responsibility in the contract, and both parties are going to be bound by that contract language. That's my favorite part about insurance, and my favorite part about the carriers that we work with. They have never not paid a valid claim. Lloyd's of London has almost a 400-year history of writing insurance contracts in various markets, and they have never not paid a valid claim, ever in the history of their business, because it's a contract. And if you understand your contract, then you understand your coverage. Insurance marketing is misleading. Okay, Aaron Rodgers and Patrick Mahomes ain't swooping down in capes when your home's on fire. I'm sorry, it's just not going to happen. Okay, so people always, you hear things like, you don't need to read your policy, it's all jargon, we got you taken care of. No, always read your insurance policy. You don't need to ask us questions, we thought of everything. Absolutely not. I like to say we thought of everything, but I want you to ask me a bajillion questions when you're on the phone with me, because I want to make sure that you understand what you're getting in the premium, and that fast quotes and cheap premiums are the best. Don't pay more for insurance. This is a retail homeowners insurance market stuff, and maybe it works there, but in our business and what we're doing, we really want to try and avoid those types of conversations or that type of marketing. So down to the basics. There's 3 insurance policies that you can get for a structure. You can get a landlord policy, which the forms are DP. You can get a homeowner's policy where the forms state HO, or you can get a commercial policy with CP. All of these carry property insurance and liability insurance. All of these come in 3 different types of forms, which is where we start breaking down to make this simple for everybody, okay? So homeowners policy, the most common one is an HO3. In the basic sense of homeowners policies, there's 3 forms: HO1, HO2, HO3. And what that means is basic form coverage, which is a named peril. So it's limited coverage. If it's not a named peril, it's not covered. Typically, usually an industry standard is 8 named perils. HO2 is broad form coverage, 16 named perils. And the 3 designates what's called special form all risk. Special form all risk is the best. It tells you what is excluded. If it's not listed as an exclusion, you can file a claim for it because it's coverage in the contract, okay? Now, the problem with an HO policy is that it specifically excludes business activity. And all HO contracts are the same. $2,500 in revenue generated at the property from a part-time, full-time, or occasional business operation is a business activity. So if you were to look at your insurance policy and it says HO3, and that is a second home, you more or less don't have coverage. They can virtually deny any claim. They also always, because of standardized form language, exclude malicious acts as a result of property entrustment. So you hand the keys over to a stranger, that stranger hands you money, they have your property for a week, and they vandalize your home. There is no coverage. This is why air cover exists. They know that it doesn't cover you. So they give you this free insurance that sometimes pay. I know people have had good luck with it, and I know people have had terrible luck with it. Now, you can get home sharing endorsements. So you get a home sharing endorsement, you pay a few bucks for it, usually a couple $100s a year, and it modifies the business activity exclusion to not include home sharing or hosting activities. Problem: if you look at your policy and it's not your primary residence and you have that enhancement, it defines in the contract language that it has to be your residence premises. It means it has to be the home where you primarily reside. It works very well for people who are renting out private rooms. It works very well for people who sometimes or very rarely rent their house out on an OTA, such as every year when I go on vacation for 2 weeks to the Caribbean, I rent my house out on Airbnb and make a little income, right? It's perfect for that. It's limited coverage. You don't need the big, robust insurance policy. Your exposure is limited. It's going to work well. A lot of things to look for too, or limitations, if that is your situation, with changes in the insurance market recently around key property risks, such as water damage and theft. Okay. They also are going to have exclusions for other key risks on liability, such as invasion of privacy, liquor liability, assault and battery. There's a lot of things, and some of these are just crazy. Yes, they probably will never happen, but they have happened, and you want to make sure you have coverage for it. Now, a landlord policy, the DP, same thing. DP1, basic form, named peril. DP2, broad form, named peril. DP3, special form, all risk, highest level that you can get on this type of form. They are written for tenant occupied properties. That's the basis of a dwelling or landlord policy. Most people have them on their second homes as well. And they state in there that your rental is rental as a residence. As short-term rental operators, we are not renting it as a residence. As a midterm rental, we are still not renting our property as a residence either. I am not changing my mailing address to your property when I'm staying at your home. I am not a long-term tenant. The biggest limitation on landlord policies is premises only liability. Every landlord policy, because again, they are standardized form language in the US, states premises liability at a limit of $500,000 or 1 million. And 1 million is a great limit to have. However, go back to the bicycle example, go back to an example of lakefront property, go back to maybe you market local attractions on your listing. That guest is going to vacate your premises, and now you no longer have coverage if they become injured or injure somebody else. That is the biggest limitation around these DP contracts with premises only liability. Okay. They also tend to exclude animal and pets. So if you are a pet-friendly property, then they're going to exclude dog bites. If somebody sneaks a dog into your property and breaks the rules, the contract still states that they're not paying that claim. All right. Traditionally, they're going to cover your contents at a very low limit because the assumption is that the tenant will be furnishing the property, not you maybe putting in 20, 30, 40, 50, $100,000 worth of furnishings in that home. So you got to be mindful of those limits there as well if you're looking at that. They always exclude malicious mischief. There is no DP contract that covers malicious mischief or property entrustment of somebody damaging the property. And then the other big thing is they cover what's called loss of rents, not actual income. So that's fair market value, which we tend to see is anywhere between 30 to 50% less than what the performance of a short-term rental is. So if you do have a claim and they cover it, they're going to pay you loss of rent, not loss of gross revenue. So you could be losing money on that contract. Did you guys lose me again?
No, you're good. Someone's trying to enter the room.
Oh, gotcha. So commercial policies, same thing. Commercial policies come in three. It's a 10-10, 10-20, 10-30, same rules, basic, broad, special. Commercial policies are superior, and I don't just say that because that's what we do. It just is. It's the fact of the contract. They are superior coverage. They have more horsepower behind the protection. I would strongly advise if you're in short-term rental industry that you shop commercial insurance. Now, they are more expensive and they often cover more than some STRs might require, but it's good to have a little bit more protection and fewer exclusions than to find out the hard way that you needed coverage for that. Not every commercial policy is the same. The one thing with commercial policies that's a little bit different than homeowners and landlord contracts is that they can be modified very easily to exclude or limit coverage in key areas. So some commercial contracts have liquor liability exclusions, some don't. Some have assault and battery exclusions, some don't. Some have recreational activity exclusions, some don't. So you really need to be mindful of what you're looking at on those limitations around the amenities that you may provide. In all reality, short-term rentals need components of all three. You need homeowners insurance because you may use the property yourself. It's also still a residential property. It's not deeded commercial. You need a landlord policy because you are technically renting, so you need components of what those contracts bring to the table. And because you are technically operating a business and generating revenue actively through online advertisement, you want to have commercial coverage, right? But we're not going to go out and buy all three. So finding a specialty provider, we're not the only ones. There's a few companies out there. Berkshire Hathaway was one that was named earlier. They do this. There's a company called Steadily that's getting a little bit more into the market. They do these modified contracts as well. The problem is they're not available in all 50 states. But you need components of all three. So what makes a quote unquote proper policy? A little pun intended, but when we're trying to build the right insurance policy for what we're doing, what are we looking for? You need building coverage, you need contents protection, you need revenue protection, you need liability protection, and you need to make sure you have coverage for specific short-term rental enhancements and the amenities offered at your property. So building protection, it's going to cover against kind of the natural disaster stuff. Fire, tornado, wind and hail, lightning, backup sewers and drains, frozen, broken water pipes, stuff like that. That's non-short-term rental related. That is your building protection. Contents protection, you're typically looking, obviously, theft and vandalism. If a vagrant breaks a window or kicks your door in during a period of vacancy and steals from you, you want to make sure you have adequate protection there. Guest damages for things such as parties, I find that is very important for a lot of folks, and they're seeking that coverage. Problem is that there's only 2 contracts in the U.S. that actually cover you up to your full limit or value of the contract, and that's Proper Insurance and Berkshire Hathaway. Right. So if the guest party is a big fear of yours, you've really limited yourself down to 2 options. Okay. You also want to make sure that you can specify the limits and they're not a fixed limit by the policy. Some insurance contracts are going to put you into a percentage limit for your furnishing. So if you have your home insured for $1 million, they're going to give you $500,000 in contents coverage and charge you for that. but you may not even have that much in your home. A lot of us in this space don't. So you want to be able to specify and modify those limits of insurance based on what you need. You also want to make sure that you have replacement cost on your furnishings, new for old. Typically, contents coverage is only going to pay you actual cash value, which is the face value with depreciation of the couch, of the refrigerator, of this, of that within the home, and not go out and buy a brand new one. Revenue protection. Again, you want to look for client specified limits where you get to tell the carrier how much insurance you want to cover your income. Some people desire a low income limit because they can float the property with their regular job. Fine. Some people want a high limit because this is how they pay for kids' college tuition. This is how they pay for their future investments, or this is their full-time job now. And so you want to make sure your income is protected adequately for your specific needs. You want to make sure that business revenue is activated due to a covered cause of loss, of course. Typically they are. And that you get actual sustained lost income, because that means it's the gross value of your bookings, not a reduced value or a fair market value. It's what your business is actually generating. One thing that we do, and I'm starting to see a couple other carriers come out with it, is no time limit on the income protection. It's either the income limit is depleted through the period of restoration, or you're back up and running, whichever comes first is when it stops paying. Now, liability protection, this is probably the biggest concern for most folks, is something happening at your property and you getting sued. How am I protected? Again, the best way to do this is through a commercial liability product. It is going to be the most secure, with typically the fewest amount of exclusions and the highest limits of protection for you to have. Typically, that is going to come with what's called 1 million per occurrence, 2 million aggregate. So that means for any one claim that happens, they will pay and protect you up to $1 million for that single case. Over the policy effective period, 12 months, they will pay up to $2 million in liability claims across various occurrences. Okay. Again, you also want to make sure that you have no exclusions for certain things like privacy, assault and battery, no limitations on animal and pets or around the amenities that you offer. You really want to make sure that stuff's covered. So if somebody slips and falls and has a boo-boo and they try to sue, you are protected. So some specific SCR coverage enhancements that we want to look for. Property entrustment. Again, I hand the keys over to a stranger. They give me money. They now have my house for a week. If they cause damage to my house accidentally or maliciously, am I covered? A new one that we brought out is squatter protection. This is more catered towards the midterm rental market. We are currently the only contract that has that. People will start coming out with it because now it's in the market. But this is to cover legal expense and loss of revenue when somebody refuses to leave, because the courts are going to charge you money to go through the process of eviction, and then you can't rent, and you want to make sure you have coverage for that. Bed bug protection is also becoming more popular across multiple different contracts. And so somebody brings bed bugs into the property, you're going to have a problem, you're going to need to remediate, you're going to have lost business revenue. This is an important coverage to have. One of the questions that was sent was like, what's one of the most popular claims at short-term rentals? This is in the top 5, bed bugs, for what we see. Okay, so something to make sure that you got. Liquor liability, because call me crazy, people drink on vacation, right? Especially down in the Vegas market. Been there, done that. So you want to make sure you're covered for liquor liability. It's not so much that the guests bring their own alcohol, it's what they do after they consume that alcohol. It's if you're providing a welcome bottle or a gift of alcohol to them. Some people do welcome baskets with a bottle of wine or champagne for anniversaries or, you know, this or that or other things. So you want to make sure you're covered. The other risk here with liquor liability and exclusions found in insurance is, what if the guest leaves a bottle of booze behind and it's missed on cleaning day? Well, you're now responsible as the host when the next group comes in, and if somebody gets a hold of that and has an issue or an injury. So checking in on that. It was some data came out in 23, something like 70% of people said that they don't drink at home, but they drink in excess within the first 48 hours of their vacation. So now you got somebody who typically doesn't drink, who's in a foreign residence that they're not used to, getting drunk, and they're not even good drunks because they don't drink they don't usually drink. So you want to make sure you have protection around this. Amenities off the property line. Not everybody offers amenities off the property line. So just because you don't doesn't mean you shouldn't be investigating coverage with protection away from your premises. But if you have bicycles or canoes or kayaks, things like that, you want to make sure that you have adequate protection. If you're near a golf course and people go and golf and they go on the golf course and maybe you provide a golf cart, is the golf cart liability protected? And then animal and pet liability is a growing sector. AirDNA has data showing that being a pet-friendly property, you can maximize your occupancy and your average daily rate. But that comes with the possibility of the guest dog biting somebody in the community. You want to make sure that you're protected for that. Are you liable for the guest biting somebody? I believe no. But the problem is that attorneys cost a lot of money, and you want to make sure your liability protection doesn't exclude it, because then your liability coverage on your policy pays the attorney fee. So here's the two big important questions when we're investigating or shopping our insurance to ask the agents and get an answer in writing. You want it in writing, not verbal. So call the agent and get this in writing, and typically from the actual underwriter is the best, because the underwriter is the one making a claims decision on the contract. If I regularly entrust my property or home to a paying short-term vacation rental guest for a period of less than 30 days and they damage or steal my property, do I have coverage? And how much? And then if I entrust my property or home to a short-term paying guest and they sue me for bodily injury, do I have coverage and how much? Right? You can add to that, I offer a bicycle at my property. If they ride the bike into town and get hurt and sue me, does my coverage respond? So here's some claim examples. Just quick disclaimer, one of these I've blurred out and marked some stuff off. It's a little crazy what happened, but it's a real example, and this is where we have to think about our properties in a different light. So when it comes to natural disasters, everything going on in California, the hurricanes, what happened in North Carolina, this is just becoming a new normal in our life on the insurance side, and it's incredibly unfortunate. Every year, we're ticking to hundreds of billions of dollars in losses. And that is one of the reasons why you're constantly seeing insurance rates go up, right? It's just part of the life we live nowadays. So here's an example from a property in Colorado, one of ours, power went out, pipes froze. It's a luxury ski property that typically brings in anywhere from $30,000 to $40,000 a month during the peak season. They had this frozen water pipe. Damage-wise, not bad. I mean, it's actually a pretty common thing for us to see water damage around 50,000, 20, 30, 40, 50. It really depends on how much water there was. Most all insurance companies are going to pay this. You have a DP3 landlord policy that's enhanced for short-term rentals. They're going to pay this claim. They're responding to it. The big one here is loss of income. So you might want to ask, we can ask, how much does a large luxury multi-million-dollar home in Colorado rent on a long-term basis on an annual rent? What would the fair market rent be for that? $15,000 a month, $10,000 a month? Not really sure. The benefit here for this client was that they insured their income for $250,000. So during the downtime of this short-term rental, they were not only paid out 50 grand for the water damage, but through our contract and paying actual sustained loss gross revenue, they were paid a little bit north of $200,000 for their lost reservations. It was essentially like they never missed busy season on this luxury ski property because of the contract language provided on an actual sustained loss basis for the revenue. Property entrustment. This is a client of mine who's been with me since basically I started at the company out in Northern Washington. And he had a group of guests book on Airbnb. And on Thursday night, that guest threw a party. And on Friday morning, he kicked them out of the property. And on Friday night, they broke into the property and destroyed the place. Okay. Now, Airbnb initially denied the claim because there wasn't an active booking, but due to the police report showing that the wallet left at the property had the same ID in it as the person who booked the property and was kicked out, they offered my client $17,000 for these damages. If you look down here, you can see how much we paid out. It was $100,000 in a penny. I don't know where the penny came from, but that's what they got. Property damage plus lost business revenue while he repaired this home. They destroyed the place, as you can see in the photos. Okay, now here's where my little shock factor comes in. Just the heads up. So this was one of the worst liability claims that I've seen so far in my career. A little backstory on this. We were engaging with this particular client around putting handrails at their pool. They had this big, beautiful pool down on a third, like the patio terraced down 3 times and the pool's down on the bottom. And on each side of this terrace was 6 stairs that went to the next level, and then 6 more stairs to the next level. And we had told them that they needed to put in handrails because we were concerned about a slip and fall liability claim happening. One of our underwriting rules here at Proper is if there's 4 or more risers, we will require you to put in a continuous and graspable handrail on those stairs, interior and exterior, okay? Well, unbeknownst to us, because we didn't see it in the advertising photos online, there is this pathway that leads to about a 40-foot cliff drop to the lake. If we would have known about this when they initially set up with us, we would have required them to put in some type of fencing at this. There is no signage. There's no illumination. Okay. This particular guest showed up at around 7:30 at night. It's a little bit dark. They drove 3 hours to this property, and this gentleman admitted to drinking in the back seat of the car on the entire way down there. So he was drunk by the time they got there. He went for a walk to check out the property, and unbeknownst to him is this cliff with no illumination or signage, and he fell off of it. He spent 7 months in the hospital. You can see these numbers that the medical center for his stay alone was $781,000. All of his medical bills and everything combined here are $1.256 million. And there was a demand letter sent by the injury attorney for $2 million. The only shining light for this particular client was that they never canceled another insurance policy that they had on the property, which also carried an additional $1 million. So they had $1 million with Proper and $1 million with the other provider. This guest was awarded the full amount for their injuries, $2 million. Okay, so when it comes to managing risk at our property, we have to think about people who are unfamiliar with what's going on, how the property is set up, where a stair or a step or a riser is, the potential risks around the property. You may go, man, I just don't want to put up a fence because it kills the view. What kills the view is losing the property because you don't have the right coverage or enough coverage for this type of injury. I honestly think that they could have demanded more and got more. And both insurance companies on this would have paid the $1 million limit, and they probably could have taken this host to the cleaners and probably at this point own their property because they just would not have enough money to pay for what they could have demanded. Okay. So some other liability related things. Pools are a big risk. We average about $150,000 in settlement for pool injuries. While they only make up about 8% of our liability claims, pools and hot tubs, the average settlement is around 150 grand. Somebody drowns at your property, the insurance, at least with Proper, we're more than likely paying policy limits of $1 million to that family. You need to have depth markers, you need to have signage, you need to have rescue equipment, you need to have waivers of liability. Okay, this helps defensibility. It helps protect you. And that's why our claims are only 150,000 and not 750,000 because we require those safety features at the property. Carbon monoxide poisoning. You got to have carbon monoxide alarms in your home if you have gas-fired appliances or an attached garage. It's building code. If you fail to adhere to current building code, that is what the attorneys are coming after. Carbon monoxide detectors are cheap. Just go down to the hardware store and buy a 3-pack and get them in your property. It's $50-$60. Dog bites. We deal with about 5 or 6 dog bites a year. Most of these are not pet-friendly properties. And almost always, it is a neighbor's dog biting the guest that the client is named in the lawsuit on. And again, you're not liable or shouldn't be held liable, but somebody's got to pay the attorney fee on that. And so making sure you have the right coverage is going to ensure that they pay the attorney's fees. The hot tub rash, which I touched on. Rope swings, you really shouldn't have anything hanging from an organic apparatus. Let's call it a tree, right? If you're going to have a rope swing, build something. Get a steel frame. Put posts in concrete to hang the swing from. People are still going to enjoy that. They're not going to not book your property because you got rid of the rope swing. It's not even a searchable amenity on the OTA. If they can't search for it, then they have no opportunity to not book your property. Just get rid of them, please. Drugs missed post-stay. There was a story in Miami about a young infant passing of a fentanyl overdose because a short-term rental property wasn't cleaned very well, and the people had a big party, and there was cocaine and drugs, and it just wasn't cleaned, and somehow, some way, that tragedy happened. Bicycle injuries, again, make sure you're checking your bikes, make sure they're not missing spokes, make sure you have helmets, waivers of liability. This is all going to help in defensibility. Bed bugs, you don't just need to remediate bed bugs, you're also probably going to get a bed bug medical case against you for bed bug bites and going to the hospital and being treated. Invasion of privacy. You have this crazy story of this guy smoking cigarettes on the front porch, and our client saw him on the Ring doorbell camera and then called him and said, "Hey, I just like reminding you that this is a non-smoking property. Quit smoking cigarettes on my front porch." They turned around and sued him for invasion of privacy for spying on him on the camera. We don't exclude that in that case, so that's something there. And then bats. We had a case in northern Idaho up by Schweitzer Ski Resort where they claim they got bit by bats. Yeah.
I have a question for you, Nick.
Yeah.
On that invasion of privacy, was on the listing that they said that they had a camera on the front or no?
Oh, yeah. You have to disclose surveillance in public areas.
So even though there was a disclosure, he still got sued.
Yeah, because you're watching them during their stay.
Did they win?
Yeah. $58,000. Yeah. No, same reaction. It was ridiculous. What he probably should have done, instead of reaching out to the guest directly, was reach out to Airbnb to say, they're breaking my house rules, have Airbnb deal with it, and then it probably wouldn't have gone that route. But yeah, no, it was one of the silliest things we've ever been involved in. Like we see this stuff all the time where people just sue for whatever they want, and then all of a sudden it comes down to, okay, now we have to deal with this, and if there's not an exclusion in the contract, then we're responding with attorney's fees and any settlement or damages.
So what state was that in, Nick?
I want to say it was Arkansas.
I don't know.
I mean, here.
Don't let the word out.
Yeah, I mean, here in Nevada, that's a requirement of the city to have the front and back cameras.
Yeah. Well, and the reason I always bring this up is because most insurance policies exclude invasion of privacy due to surveillance equipment. So now you're defended, you have to pay to defend yourself, right? So as ridiculous as the claim is, it's who's paying that $200, $300, $400, $500 an hour for the attorney, right? So, you think it never happens, and that's one case. I mean, there was another case way back in the early days at Proper where the cleaner showed up early to clean out the property and unlock the front door, and husband and wife are enjoying each other's company, if you will. And they sued for invasion of privacy. And they didn't get very much. It's before I started. I want to say it was 2015. And so I want to say that our co-founder, Darren Pettyjohn, told me they got like 50,000 or something like that. But yeah, the invasion of privacy stuff is ridiculous. And people just sue for anything. And that's the worst part about the industry that we're in as short-term rental hosts, is it feels like we constantly have a target on our back for just ridiculous stuff that pops up. So a couple things on managing risk. One, obviously verify your home insurance. Talk to somebody who knows what they're doing, and what's important, what's not important, have those deep and honest conversations, make sure you're getting the right coverage. Always have a minimum in liability on the base contract before an umbrella. That should just be standard. We're starting to see that turn into regulatory measures as well across the country, where the city or the county for permitting are requiring a base limit of $1 million before an umbrella. So it's just, if you don't have it now, it's just a good place to start. Up your coverage to $1 million and make sure that you have that. Always address the amenity offerings with your agent. Make sure you have coverage extending to those things. Do you allow pets? Well, about 1 in every 5 liability claims are dog bites. You typically around 850. Last year, or 23, was $1.1 billion in dog bite settlements on insurance. So it happens, and people get sued for it all the time. So what else can we do? Well, you can't prevent natural disasters, of course. I think that's a given. But make sure you, or if you're property managers, your owners have good and rock solid insurance. Top tier is going to ultimately lessen the financial impact from a natural disaster damaging your home and shutting your rental down. Learn the basic building codes and ordinances in your area. That's super important because that's what these personal injury attorneys love to go after. It's no longer a residential home, but a commercial property, and that's how they typically file the suit. Choose an insurance company that knows the industry and has exceptional underwriting requirements. Underwriting is super annoying. I'm in sales. I sell insurance. I just want to sell you a policy, but my underwriter is going to come back with something at some point in time and say that we need to address it. That should also be a sign of a very good company that has your best interests in mind. And remove unnecessary risks from the equation at the property. Slides, diving boards, motorized equipment, trampolines. Again, if you can't search it on the OTA as an offered amenity, I wouldn't offer it. It's probably not going to be covered, or a carrier specific to this industry is going to tell you to remove it. So again, why underwriting and why it's important. And so this is, kind of the added benefit of specialty insurance companies in this spot. We don't really operate as just selling you an insurance policy. We're here to help be your risk manager as well. And you think about the Hilton hotels and Marriott and things like that, they have these big, robust insurance contracts, but they also have very expensive and very knowledgeable structural engineers on their team that go and inspect their properties to make sure they don't have risk, to make sure they're mitigating that risk as much as possible. We can't afford to do that as short-term rental hosts, so working with a specialized insurance company that can help you identify potential risk and how to mitigate potential risk, it's just an added benefit to the premium that you pay. So sometimes we're going to have minor structural alterations that may be required, like handrails and guardrails, depth markers on pools. You might have to buy some life jackets. It's not to eliminate a claim, but it's to help provide the carrier with a reasonable means of defense. And good underwriting is almost always good coverage. And one thing to keep in mind, if they don't underwrite for it or don't ask you about it, they probably aren't going to cover it. So that's that. We do have some proper insurances, the homeowner's product, an annual home insurance policy, replace your current product, buy proper. We'll cover you on an annual basis. We also have a damage waiver company that does supplemental protection per booking. It's called Wavo. Their information's on the screen there. And then if you are in the business of property management, managing other people's properties as a third party, our other company, Wister, specializes in business insurance for property management entities. So as you grow your business, or if you're getting into management or are a manager, these other options are probably something you want to take a look at to help manage your risk at the end of the day. One more thing that I don't have on here, but I tell everybody to get or look into is the Breezeway Safety Inspection Program. So Breezeway, if you're not unfamiliar, Breezeway is a back-end operations technology company to do guest communication, inventories, scheduling cleanings, a bunch of other stuff. It doesn't matter if you have 1 property or 1,000 properties, you can be a Breezeway client. But what they have is a safety inspection program where when you're a Breezeway client, which I want to say their service starts at $20 a month, You go through and do that safety inspection, it's going to help you manage this risk. Insurance is great and insurance is there, but managing the risk on the front end is going to help eliminate the possibility of needing to engage in insurance. And I shouldn't use the term eliminate, it's going to lessen the probability greatly. So they're going to come in and they're going to guide you through your own property as you take pictures and videos at each checkpoint that they have on their system to say, where's the fire extinguisher in the kitchen? If it's underneath the sink, we're not going to give you a green checkbox. That needs to be out in the clear and open within 15 feet of a flammable of the stove. You need to have a fire extinguisher. If you have a wood burning fireplace, you need to have another fire extinguisher nearby. Where's your smoke detectors? How old are they? Do you have depth markers? Do you provide helmets? Do you do this? Do you do that? Do you clean the grill? Do you have notices here and there? Where's your cleaning supplies? Are they away from where children can get to them? They're going to go through a lot of different things, and a lot of things we don't tend to think about in our day-to-day as homeowners to help us try and manage this risk. As an additional benefit, if you complete the breezeway safety inspection, proper insurance can give you up to 10% off your annual insurance premium. So it's a great program. We have a lot of stuff that we're doing with Breezeway to try and help promote safety and risk management out there. We are doing a month-long, well, 5-week seminar called Stir Crazy. You can find it on LinkedIn. I highly encourage everybody to jump on that because it's a focus on safety, sustainability, trust, insurance, and regulations. A bunch of us will be on there just kind of talking through some of these problems that are going on in the space and how to mitigate this, things to put into play, and things like that to just make us better hosts at the end of the day. So questions, let's go.
What's the number one claim that you pay out for? Like, what is the number one CR claim?
Yeah, always and forever water damage. It's the number one claim in insurance.
Do you have an average amount that you usually the payout for a water damage claim?
Yeah, it's $37,000. And that's a problem because we're seeing a lot of companies put sublimits for water damage anywhere from $5,000 to $25,000. So when the average water damage claim is 37, depending on what your water damage sublimit is, just to figure out the math. That's how much you're out of pocket on the average. And that doesn't include lost business revenue. That's just the water damage, right? The second most common claim is wind damage. Wind blows everywhere across the country. And so, there's that. With us specifically, so you have water damage, and then you have wind damage, and then we have guest cause damage. And the reason why we have guest cause damage is because we're one of two companies that cover it. So, and that guest cause damage is not, in our data, it's not separated from accidental or malicious. Guest cause damage is cheap. It's usually like a few $1,000, like around 10. The problem is that just the frequency of the claim, and we file a lot of them. And then number 4 is bed bugs. I want to say, I'm pretty sure that's what it is. I could find the data, but yeah, that's basically it. Water damage is going to be your number one thing. It's going to happen.
So Mike had the question about like, if I understand correctly, it's not always just the water damage, it's like mold remediation, and there's a whole bunch of things attached to that. But Mike was also asking, like, what is generally the cause of that water damage? Is it a leaky roof, or an appliance, or what type of water damage?
Yeah, so it's typically going to be a faulty valve somewhere that's causing the water damage. And it just occurs, the water line on your toilet or underneath the sink. Dishwashers are just notorious for, especially in short-term rentals, because they get ran with like 5 plates in it. So they just get kind of overused. And so then the fittings break or corrode. So what commonly happens, and this is across all insurance, so it's not specific to proper, it's like everybody. So you have a valve under the sink or even a pipe in the wall that is in a joint and that joint breaks. the company is never going to pay for access or replacement of the pipe. They just don't, because it's commonly a result of wear and tear. However, the result of the water damage from that wear and tear is responded to, right? So let's say you carry a $1,000 deductible, and that situation happens, and you have $20,000 in water damage. And we're not talking business income, just the damage. You're more than likely not just going to get $19,000. Because if the access and repair of the pipe was, say, $2,000, we have a $1,000 deductible, and an additional $1,000 there is not something that the insurance provider pays for due to wear and tear. You're out of pocket too, but then you get paid 18. Now, let's say a guest, in our situation at Proper, a guest kicks a hole in the wall and hits a pipe. Well, access and repairing that pipe is 100% covered, because it was damage caused by a guest, not by an exclusion like wear and tear. Frozen water pipes is a different story. Frozen water pipes is not a wear and tear issue. Access and repair of the pipe is covered. So that is something else to think about. I don't think much of an issue down in Las Vegas, but up here where I'm at, Montana, we're bracing for -19 on Saturday. So broken water pipes are probably going to happen.
Nope.
No, thank you.
Yeah. Oh.
What else?
But I mean, the big thing for me is I'm in insurance, and I don't like talking to my insurance agent. Like, I like him; he's a friend of mine. But it's just like, dude, I just write my homeowner's insurance and my auto, and I'll pay you every year. And I hope to just see you out on the golf course. Like, I really don't want to deal with you any other way. So I understand not wanting to reach out or thinking of insurance that way. When it comes to this, it's more about the more you know, the more you're worth. So just getting that education, I would love for everybody in that room to call us and buy our insurance policy tomorrow. I just know it's not going to happen. But just calling us and getting 15, 20 minutes on the phone, let us go through your current insurance contract and show you kind of where those gaps may lie. The chances are I'm going to be 2x what you're currently paying if you're in the wrong product. But then you just know you've gotten the education, you understand where you may have gaps in coverage. Whether you think that'll ever happen to you or not, I understand. But if it does happen, at least you're prepared and understand that. Okay, well, I know that wasn't covered because I went and got the education on it and know more about my insurance policy than I did before we had that conversation. And everybody has a different appetite for risk management. Some people are very risk adverse, some people are not. And just making sure that you're comfortable with the insurance policy that you have. To me, we did our job and we were successful in our conversation with you, whether you buy from us or not. Because we know that you left a little bit more educated and you feel good about what you have in place.
One thing you brought up at the beginning that I think is important is about getting the policy. I asked this group to tell me who they had insurance with, and I reached out to one of the companies. I think it was Steadily. One of the competitors who doesn't offer a product as like high as Proper, but something in the range, right? He said, I did not have a policy. I couldn't look at one until I purchased the insurance.
Oh my.
And I told this to the agent I was working with at Proper. Of course, I had already bought the policy with Proper. This was just an exercise, right?
Yeah.
This was for Florida, and he just straight up said, we don't do that. I said, your 2 pages isn't enough information. I said, these exclusions, I don't have any detail about it. And he's like, well, you're not going to get that until you buy the policy. I said, well, then I'm not going to buy the policy, my friend. So
yeah, different insurance commissioners have different rules on that, but typically, if you ask for a sample contract, they have to give it to you. So, and Florida and New York and California are some of the states that are the most strict around insurance, and that agent with that other company was probably not acting in good faith. unfortunately. You come to us and ask me for a copy of the insurance policy, you'll have an email in 10 minutes. We'll send it to you. Like, we're not gonna hide anything. We're not, I don't get it. But yeah, I mean, they're supposed to send it to you. And in fact, on most quotes, it says you can request a copy of a sample contract. So if they tell you that, that was a smart move. Run far away.
Does anyone else have any questions? Because this poor man might like to, spend some time with his family and wrap up.
The kids are already in bed over here. We're fine. We can hang out. I just wish I had a beer or something. Yeah. No, it's all good. I mean, honestly, it's a lot of info. I get it. It's dense. It's insurance. It's not sexy. But I'm here to answer a question or what ifs. If you know what kind of policy you have, I probably know the language behind it. Yeah, in the back.
Nick, I talked to one of your colleagues some time ago. It's probably been a year and a half ago, maybe, and got a quote, and it scared me to death of how expensive it was.
Yeah.
We have AAA, and it's a landlord policy, and your quote was about you mentioned 2x. Well, it was about 3x, and I couldn't fathom that. So
yeah,
I understand where you're coming from, and I'd love to hear how your insurance works. I think it's an awesome policy, and I'd love to have it, but it's just I can't see charging my guests more to cover the insurance.
Yeah. I mean, business is simple. It's the equation of revenue versus expenses, right? So you either lower your expenses or increase your revenue. Those are your two options. So, but if I were like really putting my sales hat on and chatting with you, it'd be like, let's have another investigation in the full policy contract and see what's not covered. Because if you had that limitation on water damage, and water damage is going to happen. In fact, it's statistically shown in insurance that just a home by itself is going to have a claimable event every 9.6 years. Our data now, after a decade, shows on short-term rentals is about once every 5. You have an increased likelihood of filing a claim. So then when that claim happens, how much did they pay and what does your revenue look like? And the unfortunate truth is it's typically cheaper to pay for the higher insurance premium than deal with the out-of-pocket. But again, I don't know exactly what your AAA says, right? Your AAA could be great, no sublimits on water damage, the number one claim in insurance, and you're comfortable with the loss of rent stipulation on how they pay the income, and that takes care of you. Perfect. Again, it's all about managing risk and what you're comfortable with, whether that's paying the increased premium to us or sticking with what you got. It's
hard to, Nick. In your defense, it's really hard to compare apples frequently because, some policies, some people ask, well, I want an estimate with a $1,000 deductible. Well, that policy would be significantly greater than if you had like a $10,000 deductible.
Oh yeah.
That's just an example.
Yeah, and
significant difference in the price.
Yeah, and we get it a lot. So, it's just like they're going to send you a 2-page quote, and then folks will send it to us and say, well, I want to compare this apples to apples. And it's like, well, I can't, because I can match the limits of insurance all day long, but I don't know what they're covering in the contract. So that's why we always ask for a sample, because then I can read through it and say, look, if we're comparing apples to apples, I'm going to match the limits of insurance, and they charge X and I charge X on the limit, because that's the derivative of premium. But let's really look at what is or what is not covered, right? And then it's you, the consumer, is going to make the decision that's best for you on that. And then deductible options as well. You offset what you take on as responsibility, and then the carrier is going to charge a little bit less. It's, we go up to a $50,000 deductible if you wanted to pay that out of pocket, which for most folks is not wise. But a multi-million-dollar property, they're probably very comfortable with a $50K deductible and are fine with it. So those are options and tweaks. Or like with our policy, maybe you quoted a year and a half ago, like he said, and there's $200,000 in income coverage on it, and that makes up say $2,000 a premium, and it's, you know, that might be something you're willing to forego or drop that number down a little bit, and it helps make the premium a little bit more palatable. Because you don't need that much income, or you're not concerned about protecting that much income. So there's a lot of different ways that you can play with it, and not just with Proper, but with other carriers as well. You know, as insurance rates increase, one thing that although a couple years ago was not easy to swallow, is that we've already established our rate increases where these other companies are still raising their rate at rapid paces. And so while we stay fairly steady, we start seeing the rest of the market kind of catch up. If we were talking 8 years ago, I was typically 20% more than a standard home policy, but unfortunately the loss data for our market shows otherwise, that a little bit more premium needs to be charged in order to maintain the level of coverage. If an insurance carrier is, you know, paying more in claims than what they're bringing in premium, again, it's revenue expenses equation. They're going to raise the premium to generate more money into the claims pot so that they can remain somewhat profitable and be able to pay those losses. Mercury Insurance is more than likely going to go insolvent in the state of California after these fires. Literally a day press release on the 9th, Mercury Insurance is returning to areas of California where they backed out. News release on the 10th, Mercury Insurance doesn't have enough money to pay the claims for the losses from the Palisade fire. So, you know, it's an unfortunate thing. So what happens when Mercury goes insolvent in California? They don't necessarily go insolvent in other states. They raise their rate. What happens when State Farm pulls out of Oregon or Washington or this or that? We pay the rate as consumers on that product in the other states where they still have business. So it's an unfortunate nature of the beast. And yeah, I wish I could sell premium to everybody for $800, $900, $1,000. Just, we would have a very cut rate coverage product, unfortunately. Yeah. So, yeah, I mean, if anybody else has other questions, I mean, I'm an open book. I'm down to hang out.
We have your business cards.
Yeah, I'm sure some folks will be call, you know, because everyone's going to have specific questions related to their property. So I'm sure you're gonna get some calls.
Yeah, yeah, and so everything in my office is distributed based on, you know, typically county, actually. So if you don't have a county, a property in Vegas, but you got, you know, property somewhere else, you know, I'll make sure to get you in touch with the right person. Best thing to do if you really want to get an inquiry is go to the website. It takes like 3-4 minutes to plug in some basic property information. That'll generate a query on our side. You won't get a number from quoting online. We'll go ahead and run some quick risk analysis and make sure we have all the info. And then we can kick you off a very detailed quote to take a look at with different pricings and things like that. So don't hesitate to reach out to us.
Awesome, Nick. Well, thanks a lot for your time, buddy. And
Absolutely. Thanks for having me.
Thank you, Nick.
And stay warm out there.
Yeah, it's gonna get cold. All right, have a good one, everybody. Thank you.
Good there, Jimbo.
Oh, you're just saying that.
He's